Good morning, traders. This is Matt Krupski here from Chartered Financial Services with your weekly options beat. What we're doing here today and every week, we're going to look at different option markets. It's going to be across all commodities that are listed, mostly CME stuff. Generally, we're going to be looking at stuff that's close to expiration and looking at what might be happening in the market. Occasionally, as things develop, if there's something crazy going on in implied volatilities or skews or something like that in a longer term play, we'll look at that. But for the most part, we're going to be looking at short-term or close to expiration options. So this week we're taking a look at the crude oil markets, which have seen quite the move here in the last month. Crude oil has gone from basically $45 to $55 roughly in about 2 weeks on the news of the OPEC planned cuts in OPEC production, as well as the appointment of a lot of energy-friendly politicians and business people to the incoming Trump cabinet. So both of those things have been very friendly to oil. You've seen oil really spike here. As a result, what we're going to be looking at is some of the open interest in the crude oil options for January that actually expire this Thursday, December 15th. Talk in generally, most options open interest expire worthless. There's been plenty of studies done that majority of options that are traded, number one, are out of the money, and number two, when it comes to expiration, the majority of options expire worthless. Right now, looking at the open interest in the crude oil options, the majority, I believe it's 98% of the puts are currently out of the money. There's really nothing in the money that's significant in terms of open interest above 50. In terms of the calls, though, there's some interesting things going on. We see a large open interest in the 60 strike as well as in the 53 and 55 strikes, mostly the 55 and the 60 strike. I believe there's over 100,000 in the 60 strike and around 50,000 open interest in the 55 strike. I don't think that's going to come into play coming into expiration here in the next 2 days. Generally, a lot of times what we see going into an expiration is a counter trend move. So we've been moving up in the past 2 weeks. We could see a reversal. One of the reasons for that as well is we do have a lot of money in the money options on the call side that are currently in the money, and the 49 strike, the 50 strike, really both above 20,000 open interest in those two. Then the 51, 52, 53, there's above 10,000 in each of those as well. A lot of times when you're coming into an expiration, what you'll see is they're calling pegging a strike. And it's not that people are manipulating the markets, it has more to do with how hedgers hedge the markets, and as the options go in the money, from in the money to out of the money, as markets move around, you see it's really the mechanics of hedging that drive the prices to large open interest strikes. So happy to discuss that with you more. If you just shoot me an email, give me a call, I can talk about it more. It's too much for this video. But in general, what you'll see is it'll go towards large open interest strikes. And so if you look at the chart right now, that's the 49.50 line. So outside of that 55 and 60, I don't think we're going to continue higher. As I said before, we oftentimes see a counter trend move going into an expiration. So I'd be very careful about the long side of crude here in the next 2 days. I would expect us to maybe sell off down to the 50 line, right around there. That still keeps the majority of the puts out of the money, and a lot of those calls will be coming out of the money if we do see a move lower. Finally, long-term in crude, it wouldn't surprise me to see sentiment change. Right now, everything's been taken as friendly. The OPEC cuts, obviously from a production standpoint, less production would be a bullish thing. However, a lot of times you see what initially thought of as a bullish move turn into a bearish one as people maybe reframe their take on the OPEC move as they must be feeling a lot of pain, and then they get pressured. That could be viewed as a panic move, in which case traders come in and try to pressure prices lower just to see kind of how OPEC reacts. And secondly, the incoming administration, with appointing everybody that has strong oil ties, that will be eventually, I think, bearish for oil, because production domestically is just going to do nothing but go up if restrictions are eased and you have these people in positions of power that make it easier to drill. So that's my long-term views. If you want to talk about it, feel free to shoot me an email, give me a call. These are my thoughts independently and not those of ADM Investor Services, or Chartered Financial Services. And always remember that trading futures and options is a risky endeavor and should be not undertaken without discussing it with somebody. Thank you very much.